Hello and welcome to my presentation on how to analyze the markets using price action and indicators. This is Wieland Arlt and I am so grateful and happy to be here once again together with you at Bogo Investment Forum 2023. It's September and I like to thank the organizers of this wonderful forum for having me and to giving me the opportunity to discuss with you technical analysis, price action, indicators, markets, and of course trading and investment. Before we go into all these topics, I like to discuss with you first of all the risk disclosure. It's very important to understand that if you decide to trade, you trade on your own risk and on your own responsibility. Please use risk management when you invest so that everything goes properly in line. This is me, Wieland Arlt, and I teach you how to trade. So I'm from Germany and I'm a trader, of course. First of all, I'm a trader, but I'm also an author. So my book about risk and money management is already translated into 7 languages. And as we speak right now, it's already in translation for Chinese language. So it will be available soon in Chinese language, so maybe you like to read it as well, like all the other ones do in the world. I'm the president of the International Federation of Technical Analysts. I'm a member of the Forbes Finance Council, and I used to be a member of the Newsweek Expert Forum. So therefore, I'm happy to talk about trading, write about trading all over again. I'm traveling the world. I meet a lot of traders and investors around the world. So I have a huge network of very, very interesting people. And also I like to share my experiences about this in my speeches and when I meet other people as well. And well, what else can you expect from me? That I really hope to see you maybe next time at the Bogo Investment Forum, when we come together in person and we have this wonderful conference, this wonderful forum in China happening again. I really love to be there and to talk with you in person. Saying that, I like to invite you and like to give you my new book about the 4 biggest mistakes in trading for free. Just scan the QR code and register to my newsletter so I can send you this book as a PDF file so they can read it on all of your devices and learn a bit more about trading and investment. So scan the code right now and get my book for free. Right, now let's start into the topic. So how to read a chart and understand price action. So the question is, when it comes to investment, to really make a decision about everything we want to do in investment. So we may have to make a decision about an entry, the management of a position, and of course also about the exit, right? But if you look at a chart, it's not that easy to see what's really going on. We have to read things, and we can use, of course, some basic concepts like candlesticks or support and resistances. But the question comes to mind, what technical analysis is about anyway? So why should we use technical analysis at all? Of course, we need to identify some zones where we can expect some kind of action, right? Why do we want to do this? Because if we have these zones or areas or levels where we can see some action, these are the areas where we can enter or exit a market. Right? This is where we open or close a trade. And basically, if we look at a chart and if we want to go for a position, there are just two basic concepts, which gives us these opportunities to jump into a market. First of all, these are reverses. And secondly, continuations. Basically, that's it, what we are looking for. So let's see how this works out. So first of all, reverses, they occur as reactions on resistances and supports. And this can be like false breaks, for example, like bounces, pullbacks. And continuations, they occur as a follow-through of a certain move, breakouts and pullbacks. So let's see how this looks like. And the question is, how can I distinguish a breakout from a false break and a bounce from a continuation? I mean, this is one of the most important questions in trading, isn't it? So let's see how we can figure out and how we can use these questions and how we can identify some interesting zones just by reading price action. So where do we have some reversals? Where do we have some continuations? So let's see. So first of all, we can use the concepts of support and resistances. And this is what we see right here. We see here a false break, right? So this is a support zone. Prices go down, they bounce. So basically this is a reversal, right? Price reverse, gets up, comes down again, breaks through, gets rejected, gets up again. This is a false break. And this one is definitely a false break. So it gets up, gets down again. You see, you have a low here, you have a lower low, but it got bought up the next week because this is a weekly chart of the Shanghai Composite. So this is a weekly chart. The next week, price went up, and this one was a false break. Just imagine you sold here short. What happened? You needed to cover your position. So you needed to close your position. You get you become a buyer, and this is what happens then. Prices go up. So false break, this is the reversal. This is the moment where we like to enter as a buyer, right? What else do we have? We have, of course, a breakout. So we have support, resistance. You see how beautiful this works. And of course, we can go like here, but let's keep this one. So we have a breakout right here with this very, very strong candlestick, and then it jumps. So this is continuation of the previous move. This is a reversal of the previous move, and this is a continuation of the previous move. So what else do we have? We have several pullback and reversal and continuation situations right here, right? So we have the continuation, we have the pullback, then we have the reversal again, which is the continuation of this move. So it all happens in the area of this former resistance, now support zone. And this one goes on, by the way. So next is we have some kind of resistance right here, right? And this resistance becomes a support. See, prices go down, price reverses, go down, reverses, gets rejected right here, where we have a resistance, right? And you see how beautiful this works. So resistance, reversal, support, resistance, reversal. This is what we have. And you see how easy it is just to do some basic analysis, to have some basic concepts, and just go with support and resistance, which means support is good for reversal or continuation, and resistance is good for reversal or continuation. Whatever happens, we have some idea in mind how to enter the market, right, and where. So, and once again, we have the false break right here, so we have low, prices dip through, get bought up again. We have the reversal right here, going to the resistance zone. We have the reversal right here. We have the false break, we have the reversal. We have the resistance zone, we have the reversal again, and so on and so on. So this is basically how we can identify support, resistance areas, how we can use these reversal or continuation spots just by going with basic concepts. And if you add candlesticks, it can be even better. So if you combine these, this is really strong. And basically, using this, you might not need any other tool. So if you just follow the move of the price, like really price action, so why should you use another tool? But, of course, people try to do something else. So, to sum it up, pure price action trading is about following the move of the market according to its behavior at resistance and support zones. Adding candlesticks gives you an even deeper insight of the action. So if you combine both, you should be good already. But, again, people like to add some indicators, some oscillators. So let's see how this works out. So the question is, can I add the Holy Grail? So what is it about indicators and oscillators? So While the price is the most important information in the chart, traders try to find even better information by adding indicators and or oscillators. And of course, there are more than these four. There are countless methods and settings in these methods to get deeper information and therefore to make better decisions. And some of the most used are moving averages, which is the most basic concept of an indicator. We have accordingly Bollinger Bands. I really love those. We have the MACD, which one is also great, MACD. Maybe you're familiar with that one already. And I want to discuss with you the RSI, which is also pretty cool and pretty interesting to watch and to use for analysis. So let's go. So let's start with the first one. We have the Shanghai Composite once again, and we stick to this chart. It's a weekly chart. And first of all, I added 3 simple moving averages. And these simple moving averages, they're at the simple moving average 20, which is a blue one right here. See, it's very close to the price. And also prices goes through the average. So we have the red one. It's a simple moving average 50, which is a little bit more far away from the price action. And we have the simple moving average 200, which is, well, most of the time more or less, like in a horizontal line, not really steep, not really, like moving so fast, because we're talking about 200 weeks in this case, or 200 days if you go for a daily chart. So I really like the 20, simple moving average 20 for a reason. And this reason is that, if you use just this concept, you see the prices tend to move towards that one. And sometimes they go through, but this is used pretty often as resistance and support as well. So same goes and is true for the simple moving average 50. You see, sometimes it can be used as support and resistance, like here, see this? And the 200 is the most watched in the world. Every investor, every institutional investor is looking at the 200 daily moving average, but also at the weekly moving average for a reason. Because if prices are above the averages, it's always good for, let's say, we are buyers, we're going long. If prices are below, it's more about going short, sell. And if you're in the middle, like if everything is in the middle, it's just a sideways market, like you see right here in this area. The 20 is going through the prices, so sideways, and it's below the 200, so it has just a little twist to the downside, but it's also supported by the 50, so it just sticks right here. And you see also right here in this area, when the moment I record this, it's middle of July this year, 2023. So you see in this moment, everything's going sideways in the Shanghai Composite, and it's just in between all of the 3 lines. So this is what we can see. So what we can see also, we can see false breaks with this one. See, like breaking through, like here, breaking through the average, but then get a reversal. We have support and resistance, like here, resistance, and also support as well here. And of course, we also can identify bounces, like here, it's a bounce. Drops, returns, bounces, gets back again into the direction of the previous move. So we can use simple moving average pretty easy, right? So let's talk about Bollinger Bands. And I really love the Bollinger Bands for a simple reason. They give me all the information I need in order to make a trading decision. So basically what you can read here is if the prices are at the upper band, they are relatively high. And if the prices are at the lower band, they are relatively high, which means it's very likely to have a reversal coming up at the outer bands, like here, look. Prices go through, just a small reversal, goes through, and here we have this reversal, which means it's not like it appears in a minute or in a second, the moment it happens to go through the bands, out of the bands. It takes time sometimes, but it's very likely that prices return into the bands, like here. Bounce at the middle of the bands, like here. It's a simple moving average 20, by the way. You see, like here, this is what happens. So it bounces here, it bounces there, it bounces there. So if you have a trend, it uses to go and to return to the simple moving average 20. And of course, breakout at the outer bands is also pretty interesting, like here. So you can go with breakout strategies as well. Can be a good one too. So let's talk about the MACD. So how can you use a MACD? The MACD is in the standard settings pretty easy to read. You see, we have crossovers right here. Usually people say, okay, when it's crossing over, you have the fast one and the slow one. If the fast one is crossing the slow one, it's like from the downside, maybe you want to go long, it's for buying. And also it's pretty interesting if you see, this matches also the reversal area, the reversal zone in the chart, right? And if it's crossing down, like the fast one is crossing the slow one, you can think about opening a short position, which happens here, right? Or maybe sell. So of course this looks pretty cool, but what you have always to have in mind is that you have as well some false signals and maybe some sideways markets. You see right here, prices are going sideways, and you see it's like crossing up and down, crossing up and down. So we have to be aware of this. But if you have like some steep rallies or sells, some down moves, this one works quite well. And this is what we call the histogram. And you see also how this one just gets smaller and smaller and smaller, and then continues after the crossing to move to the upside. This is basically the difference between these two lines, right? So this is what you can use in order to, to get some kind of confirmation for a move. And you also see how cool this is. This is a daily chart of the Shanghai Composite, by the way. You can also see how cool the simple moving average 200 is. It still sits here, and you see it's perfectly, right? So it's just a perfect resistance, and then the composite goes down, bounces once again, breaks through, and then it just goes sideways above, and now sits right here, right? And this is again middle of July 2023, and we're just going around the simple moving average 200, which is more or less a fair price. So basically, this is what we can assume. What else do we have? What else can we discuss? Of course, we can use this concept for identifying some divergences. So if you go with the divergence, it's pretty interesting. Why? You see prices are moving up slowly but steady, but the indicator oscillator, the MACD is both. See, the indicator, it just goes down. So it's a divergence. And this is very interesting. So what happens when this occurs? You see that prices are going down again. So that move is maybe not that stable and maybe not that strong as just a price action might assume. And we have another one which sits right here. You see, it's even more clearer. You see, we have some kind of a double top, but we have a higher high here, but a lower high in the indicator oscillator, in the MACD. And this is very, very interesting. We have some more, by the way. We have it here, right? We have a low, a lower low, we have a low and a higher low. So we have this divergences quite often, and it's also very interesting to see. So if you see a reversal, but you have a divergence, maybe it's like, or if you're looking for a reversal and you have a divergence, maybe this reversal is about to occur, right? So if you see this and to see what happened afterwards, so this can be quite a good addition in order to give you some confirmation for the next move. And last, what I like to show you, not really last, but last was the MACD. It's of course the weekly chart. We had the daily chart, but we also have the weekly chart. And you see also how beautiful this works. We have the simple moving average 200. Then you see also we have some divergences right here. So we have a high, a higher high, but the indicator oscillator, the MACD, doesn't follow this at all. And the same goes here. So it goes down and down and down, but the MACD is already moving up. And also you see that this will not last, and then the reversal is about to occur. And this is what we can see right here. So, and also you see how beautiful this 200 line works. So we have the false break, it's good as a resistance, and we have some, some bounces here as well. This is a breakthrough. Look at this candlestick, it's pretty clear, right? So this is what we like to look at. This is what we're looking for. And then prices go up, and again, they're just moving around the 200 line right now in July 2023, moving around the simple moving average 200 on a daily and also on a weekly basis. And last but not least, we have the monthly chart, and I like to show you this because it's so beautiful. Now look, basically we can see the Shanghai Composite, according to this chart, and it goes back to 1997, has never been below the 200 moving average on a monthly basis. And if you have a situation like this, you want to be a buyer, right? This is not really clear, okay, so it takes a while, but look what happened after this. Now we're going sideways, fair enough, but this is what happens. And where might it go? Maybe it will bounce again. This might be a good opportunity to buy. And then you can go over to some 3,600 points, like the area of 4,000 points, or even higher. But you see also we have a strong resistance right here. And if you're familiar with candlesticks, now look at this. Perfect one for short, perfect one here with this two, not really dojis, maybe spinning tops, something like this. Also a good sign for selling. And combining this with the MACD, you see how beautiful this also works here. So you can definitely use the MACD for your analysis. You can definitely use it together with a simple moving average 200, and you get some good, interesting signals. And now, last one I like to discuss with you is the RSI. It's a relative strength index by Wells Wilder, and this one was Wilder Jr. And this one is very, really interesting too. So if you go, it's an oscillator, and it's measured between 0 and 100. And of course, it cannot go below 0, and it cannot go above 100. And everything that is higher than 70 in this scale is overbought, and everything that's below 30 is oversold. So what does this mean? You have a neutral area where it's not overbought, not oversold. It's just, a little bit price action, buying, selling, not really special, and therefore no really reversal points for us, not really interesting. What is interesting is that if you have some kind of situation where it's overbought, you might look for short signals in the chart, maybe with candlesticks, because prices went up and up and up. This is what happened here, like in May 22. It's a daily chart again, and this is what happened. So it comes from being oversold right here. You have this candlestick signal here. It's a bullish engulfing, and then prices move up along. See here, along the upper Bollinger Band, they push through, come back again, and now they get stuck at the 200 line and then drop. And it's perfect and wonderful in line with the RSI. But also you see this is not really happening so often. And also we have here this kind of divergence, not really clear to see, but it's definitely there. You see prices go down, but the oscillator goes up at least a bit. And we have here, it's overbought, but what you also see is that as this one goes sideways, this is really a signal. Of course, we can also have some kind of divergences like here, right? So it's gone down, prices just go a little bit up, not really, but just a little bit. And we have a very strong divergence right here. See, prices go up, but the RSI already drops. And this is what happened afterwards in the market. So you might use the RSI, first of all, as a signal of strength or weakness, first. And second, you might use the RSI for some kind of, let's say, filter, like confirmation. Or you might see, okay, if I feel like this is a very good and strong reversal, maybe at a strong resistance or support area, let's see if market is already overbought or oversold. And if this is case and you have like a good signal with candlesticks, maybe you want to go into the market, open your position. So this can also be really, really strong. Now the question is, how can this help? I mean, is this a confirmation? Is this a filter? Is this just confusion? I mean, what can we do with this, right? So maybe you want to have this like putting everything together into one chart. But what you get most likely is pure chaos, right? Again, this is a weekly chart. And first of all, what you see is that, let's say 50% of the chart is just covered by an oscillator, by an indicator oscillator, by the MACD and the RSI. You have the Bollinger Bands, you have all the three moving averages into it. And now it's really, 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 really difficult to read really the markets. What comes first to your eye is this what happens in the RSI or what happens in the MACD. It's very colorful. We want to have some kind of confirmation. But the problem right now here is that you might have different signals coming up from the different indicators or oscillators. Maybe you have a situation where you feel like, oh, maybe, look here, I have a divergence in the MACD, but not the RSI, but the candlestick is outside of the Bollinger Band, so what to do? And it's above it's all above all the moving averages. So maybe you don't want to sell, or maybe you want to sell, maybe you buy. So this can happen if you have too much in your chart. So you don't want to have too much in your chart. You want to have a choice, a clever choice of oscillator or an indicator, maybe one or two, and just to learn and to read what is going on in the markets accordingly. One side note to oscillators and indicators: when do you use which? An oscillator is always used and gives good signals in sideways markets. So this is how you can use this. And an indicator is good in trending markets, right? So if you have trending markets and then you have some kind of and you have some kind of reverses, this is what can be interesting, right? Maybe for trend following as well. So this is what you want to look for, and this is how you want to use them. So what you can do, you can distinguish profitable signals from losing ones as a filter with oscillators and indicators. But of course, and this is what we have seen in the last chart, it can lead to confusion. You can get some misinterpretation, especially if you're just new to trading, if you're just starting with trading. So maybe you don't want to go with too much of indicators. You would just want to choose one or two, and that's basically it. So it might seem easy to follow a crossover as a signal or look at an overbought area for a short trade, but it's often misleading and leads to losses if it's not according to the movement of the price, which means that the moment you ignore price action, just follow the signal from an indicator or an oscillator, you might have a lot of misinterpretation and false signals. Given that, the use of indicators and oscillators can only be limited, and price always needs to be the main factor for a trading decision. So very, very, very important also to understand. Now let's go through some ideas on how to use this. But the price is always the leading factor for a trade. An indicator or oscillator can just be a filter or confirmation. It's never a signal. This is what I feel like about using oscillators and indicators. And it's, it's definitely a good idea to keep this in mind and to think about this while trading and analyzing. So what I want to do now with you is go through some charts and see really how powerful this is. So we can combine, for example, and this is what we had already, we can combine the simple moving average 200 right here with the MACD, and you see, beautiful, right? So this is really, really a good idea to go with the 200. If you go for swing trades, if you want to go, make sure that if you buy here, you get out here, right? At at the simple moving average 200. Or if you want to go short, you can do this here as well, right? This is the S&P 500. It's a daily chart. This is the future. So we have shooting star here. This is a false break. You have the reversal afterwards. Then it gets up again. It's a support area. See here, support area. First resistance, now supporting. You know, you can also see some reversals around this one. You know, and it can be combined with a MACD. For example, you have some divergences right here: low, higher low, low, lower low, and you see also right here prices push back, buyers come in, and you see this one just accordingly to the higher low of the MACD. So this one is a confirmation. This can be a filter. So if you're looking for a long trade, this is how you can find it. Where is your target, your profit target? Of course, the simple moving average 200. Why? Because prices obviously push back and they get rejected at this area. So this is where you want to exit your trade maybe. And also you see quite a good risk-reward ratio as well. You see prices coming to the simple moving average 200. And now you're looking at the MACD, and what you see is it's crossing over to the downside. So if you're looking for a short trade or an exit of your long position, of your buying position, this is what you want to look for, right? And same here, right? So you're looking for a buying position. Maybe you want to see this one. It's a morning star. You have 3 candles right here, and it's a crossover already. So this is a confirmation. Then you can go, right? And you also see that right here, when everything goes sideways, it's not that easy to find a good signal. So there's nothing like a short signal right here, right? But it's not really like a buy signal. Nothing is what it is. So also be aware of false signals. Let's have another chart. We combine in the Shanghai Composite Index. We have the weekly chart, and we combine the Bollinger Bands with the simple moving average 200. So the Bollinger Bands, they contain already the simple moving average 20. So we have both. And we have the Bollinger Bands. And you also see on the weekly chart, and we already discussed this, how beautiful the 200 is here already. Everything was sideways through the last, let's say, 1.5 years. Going a little bit down, going a bit up, but going sideways. Well, in general, and recently totally sideways. So how can we combine this with the Bollinger Bands? It's the same situation. So let's say you want to go short, and you say, okay, if prices are below the 200, maybe you want to look for sell signals. And here we go. You have the simple moving average 20 crossing over the 200. You have this bearish engulfing. So this is the area where you want to sell maybe. You're looking for a profit target. This can be done with the Bollinger Bands or with the candlesticks, right? So you're looking for a buy signal. So let's say you want to go for a candlestick signal outside of the Bollinger Bands, which I call the expander strategy. And this is what we have right here. Yeah, it works. Then prices come back again. You have like some kind of double bottom, and then prices push up. To where? Well, to the simple week average 200. First of all, we have some kind of false signal right here. Well, this could be something you like to use for a short sell or for an exit. Well, not so sure if this really got executed. But anyway, this is what happens also in the markets. And you want to buy maybe also here when things just come through. And you see prices just go sideways. So question is, if prices are above their moving average, do you want to be a buyer or do you want to be a seller? Of course, you can go, let's say, as a mean reversion, but maybe it's better to look for some buying opportunities as long as the simple moving average gets crossed. You see right here, here's we're going sideways, so there's not really much to do, much to gain. Can go from one side to the other, but it's not really something where you can have so many profits. So price bounces here, could be a false signal, which it is. Price drops, and you can combine this. But also, what comes into mind is that you have two kind of signals here. This is a buy signal. According to the expander strategy, price goes outside of the Bollinger Bands. You have a candlestick, which is a buying signal, which this one is a hammer. So usually, maybe you want to go into it and buy it, but you're below. You're below the simple moving average 200. Maybe you say, I don't know, maybe I don't want to buy. And this is what happens if you have too many information in the chart. You miss opportunities, which can be profitable, and you will trade opportunities which will be losers. So this can happen, and that's the reason why it's always good not to have too many of indicators and oscillators in the chart. Now let's see, what else can we do? We have, once again, Shanghai Composite Index. It's a weekly chart, and we have the simple moving average 200, we have the Bollinger Bands, and we have the RSI in the basic standard setting, of course. So again, you can combine this here, and prices break through. They are overbought. You have some signals here in the area of the outer Bollinger Band, of the upper Bollinger Band, and maybe you want to go short here, or you just want to sell your position, right? So let's see how this one works. So this is oversold, and this is basically a false signal, right? So if you just follow that one and say, okay, I'm going to buy, it's oversold, you get stopped out and you make a losing trade. So again, so what to look for? Of course, you have to be very sensitive and very careful about the combination of everything, right? So this one is good here. See, it's oversold. You have a reversal sign outside of the Bollinger Band, what we already discussed, and then prices just go up. So this one is what you might look for right here. It's overbought. See here, but it's not really a signal, right? So it's overbought, and now we have some kind of divergences already. High, lower high, same level, and moving sideways. And this is, well, where you cannot go into it. And that's why it's okay. It's okay if you trade sideways markets, if they're too much and too low, so you can do some swing trading in the sideways market. But if prices just go up and up and up and up without reversal, it just sits here forever. And this is what you also have to bear in mind. So with this idea of, of the theory, now let's go into the market outlook. Where will prices go the next month and weeks? Let's say first weeks and then months. So where are we in the world's markets? And I have some charts prepared for you. Let's discuss them. And we already saw that one. I really love that one. So where might prices go? It's a monthly chart, once again, of the Shanghai Composite. I have the RSI here for you, and you see, wow, yeah, this one is really overbought, and you see how strongly overbought it is. And this is definitely what you can use also. This is where you have the sell signals overbought, so you get confidence and confirmation for exiting, or maybe you have a short trade. So now the question is, where might it go? As we discussed, it's just moving sideways. So what can we expect? We can expect that this one will be support and resistance area. So we have 2,800 points and something around, let's say, 3,800 points, maybe up to 4,000 points as maximum for up moves. And these are the levels you want to look for. So what I think for the next weeks and months is that things go sideways. They're just moving sideways a bit. It gets interesting once it breaks here and once it breaks here. In general, I don't think that markets will crash at all. So I'm more of the positive guy here. So I think prices will go out to the upside. They will break out to the upside. And then the question is what happens afterwards. Do we see something like this? Like a steep rally? Then there will be no pullback. So this can happen, but I prefer something like breakout, pullback. It also can go to the inside and then just moving up again. Because this one gives you a good opportunity to enter the market. I would be very, 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 conservative with shorts. I would not recommend to sell the market. I would rather wait for buying signals. This can be a buying signal here as well, you see. If you want to play this one, then you want to see with the oscillator that something is oversold and maybe you want to have a false break coming back. So I'm more on the buying side when it comes to the Shanghai Composite, but all the other markets as well. So this is what you want to look for, maybe that you go with buying signal from the downside and just going long up to 3,600, 800, maybe 4,000. And this is critical from my point of view. So this will be something we want to look for the next weeks and months. Let's go to the weekly chart to have a little bit clearer situation. We have also here, I really like this one. So you have this resistance area now. You have this one support area, another support area. So this is where the action will be. And I would look for situations right here the next weeks just to see what happens at the upside and to see what happens at the downside. So I rather would look for, let's say, some kind of candlesticks for reversal like these two, look, to buy. I would be very, very cautious in selling here. Can be a good one, but not necessarily. I think, and this can also be something we can have in mind, I think that it might just break through and ideally come back for a pullback, giving us the opportunity to enter somewhere around here after the breakout. And maybe it's a false break, but still maybe this will be the area where we can enter as a buyer. And of course, you see right here, this is a strong resistance around 3,700 points. So this is a first target, and maybe this is the area where the pullback just comes, giving you the opportunity to enter on the way to 4,000. Now let's go to the S&P 500. So it's a weekly chart. I have the MACD in here. You have the divergences, right? Positive divergences. The market is dropping, but MACD is rising. And we're going straight to the new all-time high. So basically, I think it's pretty obvious. Markets are moving up steadily, not really fast, but steadily. And I think within the next month, let's say to the end of the year, we're about to touch the all-time high and just make a new one, maybe make a new one. So this is what I feel like, and the question is why? Now, if you look at the monthly chart, and we were discussing the idea of crossing, now look here, the monthly chart just crossed, and now it's middle of July, right? So the monthly chart just crossed over and is about to go up. And look where prices are. So if you follow the idea of the MACD, this should rise, right? And it just rises with the prices. So I'm very confident that we make a new all-time high here and that we can, maybe push through, have a pullback, and continue. So this is what I feel about. Let's see really how this works and if this works, but this is first of all my idea of where the markets might go in the future. And let's go to the Nasdaq. So we have the monthly chart here in the Nasdaq, and it's the same situation like in the S&P. We have crossover just happened the last month, and we are already about to hit the all-time high. So there's not really much to do. Maybe the moment you see this one, you already have a new all-time high in the Nasdaq. There's not really much left. So this one is pretty clear that it goes up and we will have a new all-time high. I mean, we have right now in July 2023, we are driven by artificial intelligence, and this is what you see also in the chart of the Nasdaq 100. Let's take a closer look to the weekly chart, and you see we are coming, if you feel like, we're coming to the upper side of the MACD. So of course the rally is pretty clear and obvious, and if you want to watch out for a pullback, just to come back to, maybe for an entry, this is the area around, let's say 13,800, something like this. This will be the area where you want to look for buying signals. And again, you want to look for something like this as an example for your trades before coming up. So this is my favorite, by the way. This is my favorite idea, around 14,000 points, give or take, more or less, a little bit more, a little bit more less. But around this area, I would rather like to see some buying signal to go with the reversal, to have this idea of a structure, right? So this is what I'm looking for, and maybe you want to do the same. Now, let's go to Germany. As I am in Germany, I'm from Germany, I'm a German, so that's the point. And everybody in Germany loves to trade the DAX. Maybe you also are familiar with this index. So this is a future, it's the FDAX, it's a monthly chart. And what we see is that we already hit the all-time high. So we made new ones right here. And also you see the MACD did the crossover at the beginning, let's say in spring, through 2023, and is about to move up. But what you also see is that it's just getting weaker. Why? Because we are moving sideways for 3 months, 4 months around the area of the breakout. So is this a strong signal? Now look here. We're going sideways, 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 dropping. And I can imagine that this happens. Once again, we can have a double top. The question is, where does this end? Around here. Somewhere around, same like the Nasdaq, somewhere around 14,000, 30,800, something around this. Ideally going up. Why? Because of this. Right? So, again, as an example, this is what you want to look for. If you want to trade the DAX, this is what you want to look for. And then we have resistance here with the all-time highs broken, maybe a pullback. And then again, after the pullback, maybe right here, this is my idea of where the DAX moves. And let's go from the monthly chart to the weekly chart, and you see it's also pretty clear. Now we're in the correction mode, and again, it's middle of July 2023. So the moment you're looking at this analysis, it's already done, right? So we have the support area here, and we have the next very, very strong area right here. So somewhere around, let's say 15,000, but you also see that we have this one here at around 14,000. So this is where action goes. And you see going sideways with swings, so it can easily drop. And this is not really a dangerous situation for the market. So it's just continue the sideways market being at good support level and having the last support around here. So maybe it's something around 14,000 you want to look for, a little bit more, maybe a little bit less, just if you have a peak through. But already above 40,000, let's say 40,500, something like this, might be the idea to enter the market as a buyer, and then also you see in the MACD, it might be here then somewhere around this, and then it can go up again. So this is what I want to look for, and it's something you want to do maybe the same. Let's go to the most traded currency pair. It's the US dollar to the euro to the US dollar. So it's a monthly chart. This is a 200 months line, so we are below. So it's more short, so the euro is weaker. And now look where we're coming from, right? So the euro is weaker, and we have here in this monthly chart, we have in July 2023, we have hit a resistance zone. Now the question is, what happens? I can imagine, and the moment you see this, you already know what happened. So I can imagine that prices just go sideways a bit and maybe go lower a bit, just to go up after that, having some kind of pullback and going over 115, maybe 120. Depends on monetary policy, of course, but this is the area which is the maximum from my point of view for the euro. Maybe 120, maybe a little bit more like 123, 24, but I feel like everything is going the next months more in a sideways move, not so much like we have high volatility, more something around, let's say, 115 and 1.5. So this is something I have in mind for the euro. So let's see how this works out and turns out in the future and what we can do with this. So weekly chart gives us the same idea. We're going sideways right here. So we have a strong up move, and now we have, since the beginning of 2023, we have a sideways market. And it's pretty obvious. Yes, it's a little bit some kind like a wedge, but anyway, you see, this is sideways market, and it can happen to be like this, maybe with a pullback. So this might be something where you want to enter. Again, this is an example of a hammer, of a reversal sign on a weekly basis, and then this is what you want to look for example, right? So we have also here the simple moving average 200. We are below, not just on a monthly basis, but also on a weekly basis, and we just hit here the roof just to drop. So it's somewhere sitting tight here, going sideways and a little bit up, a little bit down, maybe something like this. This is, I think, pretty easy to spot and also easy to follow if you like to. So as a conclusion, so what is the best trading setup now? Pure price action, or is it the use of indicators? I mean, we have seen both, right? So we have discussed price action, we have discussed indicators, just a few, like 4, and it's a combination of both. So again, an indicator oscillator can only give a limited information, as a calculation always is about the past, it's not the present. Because in order to have some kind of indicator oscillator, you need data. And the data always comes from the past. So there's no other way to have it. And therefore, all your trading ideas are about the past, if you go just with indicators. So as trading decisions must be made in real time, the signal must be in real time too. Of course, right? That's why I love candlesticks, by the way, because they are in real time. This is what happens right now. But you can use an indicator oscillator to filter. So you can use it as a filter, that you not just jump in with every signal coming from price action, but just like the most important signals, those where market really is overstretched in its move, where I feel like, yeah, okay, now everything is overbought, everything is oversold. This is the right reversal. This is the right support area. This is the right resistance area. Just to open your position in a proper way, right? So this can be a clever and a good way to do so. And the reason why people are relying on indicators and oscillators in their trading instead of the pure price action is very simple. They don't know how to read the price action in the chart. They don't know it at all. And therefore, you know now, because we are discussing price action and we are discussing oscillators and indicators and how to use them. In a nutshell, of course, but you already know how to read this, and therefore you already have an edge compared to all the other investors out there. And therefore, I like to close this one with just one saying: nothing beats the price. Nothing beats the price, and this is key in trading and investment. So if you want to learn more from me, if you want to learn more about trading and investment, so this is your opportunity. If you want to go with a coaching, one-to-one coaching, just use this QR code to make an appointment with me, to talk directly with me about what you need for trading. It's in English, of course. And if you want to go with this, just use that one. And I'm happy to discuss trading and how to be successful as a trader and investor. And therefore, I hope to see you soon in China. And of course, I also hope that you like this presentation. If you have any questions, I'm really happy to answer them, either by using this QR code, come directly into my schedule, or just send everything to our colleagues from the Burgo Investment Forum. And once again, thanks for having me. I'm so honored and grateful to be part of this great forum, and therefore thanks, all the best to you, and I hope to see you all in the next year live and in person. Your Wieland Arlt.